Hey, my name is James Nicholson. Welcome to my YouTube channel. In this video, I want to talk about what's the likelihood of interest rates now going back up. You see, interest rates have been very volatile. When I say interest rates, I mean mortgage rates, the rate that you get, not the Bank of England rate, because that's just been stuck really high for a long time until the first drop that we had about a week ago. But mortgage rates, the mortgage rates that you and I get is more important to us than what the Bank of England rate is. And they've moved a lot over the last year or so, up, down, sideways. So in this video, I want to talk about what's likely to happen to mortgage rates for you over the next few months. Now, before we jump into this, as always, if you haven't done already, do subscribe to the channel over there and hit that bell notification. We're on the way to 28,000 subscribers now. I appreciate everyone that does that. And while you're here, smash like, tickle like, do something to that like button. That really helps me, I'll be honest, with the YouTube algorithm. I really appreciate you for doing that. And that helps us get more views as well. So, interest rates. Unless you live under a rock, you know that we've had high inflation over the last few years. And that's been caused by money printing by the Bank of England. It's been caused by supply chain issues. It's been caused by the pandemic. We all had more money just sitting at home, not spending money. And that was really high. It was high, as high as it's been since the 1970s, and peaked out in the UK at around 11%. So nothing that we really want to repeat if we can. So the Bank of England has a tool to reduce inflation, and that's to increase interest rates. Now, they acted quite slow when they did this. They should have increased a lot earlier, and maybe we didn't need to go so high as we did. But they did increase interest rates 14 consecutive times. We went from pretty much zero interest rates to 5.25%, which is unheard of. Now, what's unheard of is not 5.25, it's the speed, as in 14 consecutive increases. So that happened. Those interest rates started causing pressure on people with their mortgage payments, with their credit card payments, and started to squash some of that inflation out of the economy. Now, inflation also left the economy by time because inflation is just on a 12-month basis. So you could say the prices went up 11% last year, and as long as they're not going up at that rate anymore, then the inflation will drop seriously very, very quickly. So we're back at 2% in May. We're back at 2% in June. But then the July data came out this week, and the inflation went from 2% back up to 2.2%. Now, this was better than we expected. So the analysts expected inflation would go to 2.3%. It didn't. It stuck at the 2.2, which is where we want it to be. So now mortgage rates is something we've got to consider off the back of this, because if the Bank of England put interest rates back up, that would be a problem. But here's the thing. The Bank of England have said for months that inflation was going to go back up at the back end of this year. This is not a surprise to them. So when they cut the rates in August, they knew it was going to happen. On August 1st, when they cut the rates, they knew the inflation data was going to get worse. They knew energy costs had increased on last year. So costs to us, the inflation had gone up that little bit. Now, the good news is it wasn't as bad as what the analysts expected. The Bank of England are saying by the end of this year, inflation could go back up to 2.75%. Now, hopefully that doesn't happen, but if it does, it's still expected. So they did that cut knowing that inflation was going to go back up. Now, it's all kind of irrelevant though, because the mortgage rate that you pay is not necessarily based off the Bank of England base rate. It's based off something called the SONIA swap rate. Now, this is the interest rate that banks like HSBC, they borrow at from banks like JP Morgan. They borrow from the bigger banks, right? And that dropped significantly over the last few weeks. It dropped when the Bank of England dropped their rates. It also dropped, do you remember the stock market a week or two ago dropped quite badly in a day because they felt the US was going to go into recession? Well, the SONIA swap rates dropped quite a lot at that time too. So that gave the banks, the mortgage lenders, a little bit more room to borrow some money at a cheaper cost. Now, SONIA swap rates have gone up marginally, but what is driving mortgage rates going down for you is something different. And that is that the market is quieter at the moment. It's based off the fact that transaction volumes are down 25%, which I've said in quite a few videos recently. And so that means that banks, building societies, mortgage lenders, they're getting less business. They make money by lending you money, by charging you fees, by doing transactions, doing remortgages. They want that stuff to happen as often as they can. And the more that happens, the more money they make. Now, in December 2023, the market was quiet again. And January, February and March this year of 2024, mortgage lenders started to cut rates. They cut the mortgage rates in order to stimulate the market, in order to get people like you and me buying more properties, doing more remortgages, changing lending and getting them more fees and more transactions. Then the market picked up again by the spring of 2024 this year, and the banks felt, business has picked up, let's start creeping back up those rates again and making more profit for us. Then, because they did that, everyone started to jump out the market. The transaction volume dropped because of the election. The transaction volume dropped because people wanted to see a house price is actually going to drop because it's been a fairly flat market, unless you're at the high end of the market. They also wanted to see our mortgage rates or interest rates, the Bank of England rate, is that going to start dropping? So a lot of people sat on their hands and didn't start doing many transactions. So in June and July, the end of June and the beginning of July, mortgage rates started to drop again. And what you're seeing, the rates that you're seeing today, is more based off the fact that the market is slow. So the lenders are trying to get your business. And so the rates that you see, the sub 4% rates, are going to stick around for a little bit. The only way that that will change is if the market suddenly gets busy again. If you start seeing more transactions, the market getting busy, house prices tearing away again as they have done in the pandemic, then maybe they'll increase their rates because they've got the business and they want to make a little bit more margin. But right now, for the rest of this year, I believe that the rates that you see right now are fairly safe. I don't feel that you'll get a much better rate by the end of 2024, maybe 0.25% at best. Even if the Bank of England drops rates at the Bank of England, I don't think that it's going to impact the rate that you and I get on a mortgage massively. So if I was sitting on the fence right now and saying, you know what, I could remortgage now, but I'm going to wait 6 months because I want rates to drop, you've got two options. One, wait. That could cost you more money because you'll go on the variable rate with your lender at that stage. Or another option is to look at a tracker mortgage. You could consider that. I've made a video. Go onto my channel, look, do a search for tracker. You can see the pros and cons of tracker mortgages. That could be an option for you. Or there are lots of people at the moment taking 1 year or 2 year mortgages because they feel that could be the best option for them. So all in all, I feel rates are fairly stable for the rest of 2024. 2025, no one knows. I don't have a crystal ball to tell you that. Do let me know in the comments below what you think will happen with rates in 2024. Do you agree with me? Disagree with me? Do smash that like button. Do subscribe and hit that bell. And check out all the other content on my channel. We've got hundreds and hundreds of videos now, including this video right here.